Would I buy this business? There is a men's jewelry e-commerce business for sale in Tampa, Florida that can be ran anywhere. And I'm going to break down whether or not I would even pursue buying this. Is the purchase price too high? How would I even go about buying it, since I've bought other successful businesses in the past. If you like this type of content, I post a video every day at 1:15 about how to buy a business, how to start a business, and entrepreneur related content. So give me a like and a subscribe. Let's hop into this video right now. All right, let's hop into this men's jewelry e-commerce brand for sale. Very interesting when I saw this business listing, because from the surface level, it looks like a slam dunk. But when I was reviewing this, there's a lot of potential red flags that I would really want clarification on. So I'm going to give you my inside take on this business, my personal opinion on whether or not I would really pursue it. But let's dive into here. So it's a men's jewelry e-commerce brand. It looks like they do bracelets and rings. I'm going to get into the numbers in a second, so let's stop this. But also, it was established in 2019, so he's had it for 4 years, which is kind of interesting, because the first question I always ask, why are you selling? Because when you read through this, he's got a big email list, he's got a website with tons of visitors. Everything is great. The social media platforms is great. He's on TikTok, he's on Instagram, Shopify, 25,000 email subscribers. He says profit margin over 30% at some point in here, but I ran the numbers. He's only at a 26% profit margin. So there is some inconsistencies with the numbers with what he's saying in here, but I don't look too much into this. I don't look anything good into this. I don't look at anything bad into this. Actually, honestly, I probably look for more bad things than anything else. He's got 2 employees. One thing that I read in here, the owner is working 2 hours. Let's find this. 2 hours. The brand is heavily automated, with the current owner requiring roughly 2 hours every week to manage operations. Then why are you selling if it's only 2 hours, right? So you have to ask your question. You can't look at it, you have to look at it with the biggest critic eyes ever. If it only takes you 2 hours and you're running a profit margin of 26%, you're making $179,000 a year, why are you trying to sell for $700,000, right? Okay, let's get into these numbers and see if it makes sense, even though there's some red flags here, and I'll get into the red flags in a second. There's no furniture or equipment. It's completely online. He runs it from Tampa, but it can be relocated anywhere. See, it says relocatable right here. Okay, so you can own this business from anywhere. Gross revenue is $693,934. His profit is $179,503. So his profit margin is 26%. His multiple here, and this is interesting, he's asking for a 3.9 multiple on his profit, right? This is where I'm trying to tell you that if you build a business that has value of recurring revenue of a website like this, this does has value. This is a very valuable business, because if we can verify what he's saying here about the monthly site visits, the email subs, all these things, if we can verify those things, that is of value, because you do have people's information in which you can continue to have that customer base re-interacting, repurchasing from your business. So 3.9, I would want to do some research on some e-commerce brands of what is a standard multiple of the profit, which is EBITDA, right? So you would search average multiple on e-commerce businesses for sale. Let's see here. So it's about 3 to 4.5, right? So he's at 3.9, so he put himself right in there, and that's doing under 1 million in profit. So I would say he'd be lower, or he's pretty close to 1 million. So I would say that might be a decent multiple, but you can always debate on that. So I mean, I'm just telling you how I would evaluate this, right? If we were to pay cash for this business, that means we give him $700,000. We're going to get $179,000 back. That's 26% return. That's a decent return. I've seen higher on other businesses that you could potentially buy, but this is an e-commerce business, and I think that the nice thing is that you can work 2 hours and make 26% on your money. Now, I don't know if that's necessarily true, but we'll get into that later. I would not pay cash for it. I would not pay cash for pretty much any business, because if you can leverage debt and the business works out, I will say as a caveat, you should project about 20 to 30% of the revenue going down after you buy it. 693, 179. Why is that? Because when an owner wants to sell a business, when he decides to sell the business, usually the revenue is already kind of declining because he's not going to put as much effort into it. When he is mentally wanting to sell, that means he's kind of done. And when you're done, you're not hustling as much. So you're going to see about a 10 to 20, almost 30% dip in revenue and cash flow. A lot of people don't tell you that when you buy a business, but I'm being honest and truthful here. Okay. So if we finance it, we're going to have to put 20% down. That's $140,000. You're going to get a loan amount of $560 on a 10-year note. I would try to do the longest year possible on your term, because the higher the term, the better the cash flow is going to be. 10% interest here, get a variable interest rate. Interest rates, in my opinion, are probably going to go down in the next 2 to 3 years. So if the interest rate goes down, your interest rate goes down because it's looked at every month or every quarter. Okay. Monthly payment on that debt is $7,400. Your monthly cash flow before the loan, which is the $179 divided by 12, is $14,959. So if you buy this business with a note, you're going to get $7,559 back every month on monthly cash flow, assuming the revenue is equally dispersed, which it probably isn't, because on Christmas time, it's probably more heavily weighted there, which I would probably want to see how his Christmas sales go before I buy this business. Also, net profit is $90,703. So that means after the loan, you're netting $90,000 a year. That's a 65% return on the initial $140,000 investment, because his business is paying for the loan. Okay, so his business is paying for this monthly payment. So you bought it and you're netting 65% of that initial investment, which is a pretty good return. The opportunity is to grow this business. Any business you buy, the mindset should be that you're going to grow that business, because if you're not going to grow it, businesses will shrink. You're either growing a business or you're shrinking a business. So make sure that you're going to go into this business and you're not going to work 2 hours a week. Okay. So let's get into some of the questions. These questions are probing questions, and these are questions that I would want to ask any business owner, because it's a massive purchase. You're investing in a business, you're buying a business. Make sure that you know all the details. Why are you selling? That's the number one thing. You say you only work 2 hours a week. You're making great money on this business. You're talking about all the opportunities in which you can scale and grow this business. Such a great opportunity for the next owner. Then why are you selling? If I have a successful business, right? Could I sell the business? Yes. I am not selling it because it's paying me money. I would not sell that business. So I want to know, why is this person selling the business? Where do you buy your jewelry? How is it made? That's another thing. He says he drop ships about 50% of his sales. Okay, I want to know if that relationship, that drop shipping contract that he has, that relationship with that manufacturer, that wholesaler, whatever it is that going to continue after the sale? I would almost want to have a call with all of his distributors, all of his manufacturers, and seeing and confirming that his relationships are in good standing, and that all the things in which he's buying is going to continue to be made after the sale. You want to know the viability, the strength of his company, since he does not manufacture or design. To my knowledge, it looks like he's in e-commerce, so he doesn't control his product. So my thing is, if you don't control the product, I need to know who controls the product, and I need to make sure that those relationships are sticky and that things are going well. Because if they're not, you could buy this business, and I've almost been burned in another business that I bought, in that the person that we bought it from did not have great relationships with their contracts, and he was actually potentially getting removed from the contract, and we bought it, and we assumed the contracts would still be there, and they almost fell out. So make sure that you're doing due diligence, because even if somebody lies to you, it's hard to go after them, okay? So make sure that those relationships are in place. You should know almost everything you possibly can about each product, where they get it, how much does it cost, is that cost going up, because that will impact the purchase price. If the viability of the profitability is going down and the company is not going to continue to be successful, then you do not need to pay full price. You need to see what the trend is going like in this business, and that's getting into the nuts and bolts here. If the owner says, I will not contact the distributors, their manufacturers, until after the sale, I'm not comfortable with that, that is a massive red flag. So do not go down that road. You want an owner in which is super transparent, not saying he's not comfortable with sharing stuff. He should be comfortable with everything. If you're going to buy this business for $700,000, you need to open up every freaking thing that I want to know about this business. If you don't, then I'm not going to buy it. Okay, so don't be committed to buying this business. Be committed to knowing the information about it. And if there's anything sketchy, run away. So it shows 2 employees, right? You scroll down here, 2 employees. What do the employees do? You say you work 2 hours a week. Why do you have 2 employees? What's going on? Are they going to stay on? What are they doing all day? I just don't understand. It's if we take the 2 employees away, is the profitability going to go way up? Could you do all the stuff that they're doing? What's going on there? Can we keep the name, branding, and marketing? It's a stupid question, but it is a smart question because some people assume that the name, branding, and marketing stays with them because business sales are the Wild West. There is no standard procedure, standard document. It is what it is. Everything's negotiable. So make sure that that's there. Do due diligence. This is super important for this business. Making sure that you have financial records, profit and loss statements, balance sheets, income statements, and cross-examine those with the bank statements and the tax returns to verify that funds have actually been hitting that bank account, that this is not all just one big fraud transaction, okay? So vetting those financial records, getting into the expenses. What is he paying? What's going on? Questioning those expenses. This is going to be a long process for this business. Can we meet in person? That's one of the most important things that I would do. I would spend the money. You're spending $700,000. Looks like the guy's from Tampa, Florida. Fly to Tampa, Florida, meet with the guy, ask questions because this is a big transaction and there's some potential red flags that I see in this transaction. So we're going to want to know, why is he selling? And if he's not wanting to meet in person, or the business broker on this, which is down there, I'm not going to share it, but you can look up this listing. But if the business broker is saying the owner does not want to meet with anyone in person, red flag, run away. There are so many businesses for sale that do not get trapped into falling in love with an e-commerce site. Don't fall in love with the business. You have to be saying, okay, if it doesn't make sense, run, right? Don't fall in love. It's a business decision. It's about the numbers. The numbers work out on this. I think the purchase price might be a little bit high. I like to see my ROI on the down payment to be in about 70 to 80%. And I also want to see my pay cash ROI a lot higher. I think there's a lot of things that could potentially go wrong on this business, more than things that could go right. But that doesn't mean you shouldn't pursue it. I would, if I was, this isn't really my cup of tea. I'm not a big e-commerce person. I think that things go hot and they go cold very quickly in jewelry and merchandising. I've never started a business. I've never owned a business in that. So this isn't really my cup of tea. So I wouldn't pursue this. But if you're kind of in this area where you're looking for something that's very passive, that's kind of relocatable, this is something that you could look into. He also says seller financing available right here. But I would just definitely tread lightly on this business because I feel like it is very interesting why the owner is selling. But I could just be a little bit paranoid, which I might be. I don't know. But I am paranoid because I want to make great financial decisions. So if you like this type of content, hit like and subscribe. I'll be posting a video every single day at 1:15 p.m., either reviewing another business for sale, how to start a business, and entrepreneur-related content. So you guys have a good one, and I'll catch you next time.